What's up, motherfuckers? Throwing together a midweek update video. Been pretty busy between work and I've got some stuff going on. My personal life been pretty busy lately. So no video Monday or Tuesday. The price action looks great as far as I'm concerned. We're in the middle of an uptrend right now, forming higher highs and higher lows on the micro. It looks great. You know, it's just taking some time to play out, but still we're in an uptrend. Broke all of our resistances on the macro that we had to break. And, you know, we're just climbing to the upside slowly but surely. So let's start with the macro as always. And these first two slides that I'm going to cover are the most important slides of the video. So this is the key here. And it's a little bit different today, the way I have the macro perspective, but it's all the same. Nothing has changed about the way I'm going to present this. I added one trend line, which is the most macro possible trend line on AMC. This white trend that you see here from IPO right here all the way down, your first touch point here, bounce off there, another bounce off right here, another bounce off right here, break below, reject it, the flat portion, the original, reject it here, and then you finally break over with a gap up, your macro fractal break right here into your squeeze for January. So you have your January squeeze, you come down from that and actually test on this trend, bounce up into your June squeeze, and then play out the macro as we should, the same exact way that we saw in the prior macro back here, playing it out the exact same way again, all the way down the descending wedge, your breakout and your retest of the wedge, also retesting this trend right here. So this white trend on the bottom is the most macro trend on AMC, and it's where we found the bounce. It's also the point where the support and resistance of the descending wedge meet at that trend there. So I wanted to point that out. Also, before I even get into this, the only time we broke below this trend was right here, the original flat portion. So your first rejection, your second, and then you finally on your third try, you get your January squeeze right here. This was the only time that we broke below this trend. So even though we formed a new all-time low over here in the current macro, again, the third bottom, the lower low, also the all-time low landmark that we saw of the previous macro, even though we formed a new all-time low here, technically we're in a better spot than we were back here because we're on top of the trend rather than underneath. And obviously this red horizontal line on the bottom is 0. Both macros, the descending wedges of the macros, were heading for 0 in both macros and then squeezing from this trend here. Also, the first macro here, your January and June equivalents, the green and yellow circles you see here, from this trend was a 91% move. So you get your January, you get your June, and then you get your descending wedge all the way down. You get your green, red, blue, drop to the flat portion, play out the flat portion. January squeeze, come down and retest the trend. And from this retest, 1,240% move to the upside for your June squeeze. And then again, playing out the June squeeze, the flag, which you break down from, your macro break here in the blue box that you see here, your green, red, blue, your flat portion that played out on top of the previous flat portion as support, your breakout, and then your retest, knifing down to the third bottom, the lower low, and the all-time low, and also finding a catch on that macro trend that dates back to IPO. So being that the original macro was 91% move off of this trend, the second macro, the current one, was a 1,200% move off of this trend. It's pretty safe to say that the next macro that we get is going to be an even higher percentage move. And AMC and meme stocks aside, as far as I have seen market-wide, whether you're looking at, you know, S&P 500, precious metals, crypto, whatever you're looking at, the macros are growing larger and larger each iteration. It's not just AMC. So it's not just AMC that's going to see a higher price target. GameStop will as well. Cryptos will as well. Precious metals will. SPY is going to all-time highs. It's market-wide. The macros are speeding up each iteration as there's more volume being injected into the market, and they're growing larger in magnitude due to that volume. And yeah, that's pretty much it for that. Now, moving on to the next slide, which is the same exact thing that I just showed you, except a weekly perspective. I think it's a little bit less cluttered. I don't have the boxes here. Just showing you again, here's that macro trend, the most macro trend on AMC, this white descending trend here. Your January equivalent here, your June equivalent, the V shape, your macro break, your descending wedge. All the way down, drop to the flat portion, play it out. Your January squeeze again, the start of a new macro, come down to that trend. That was actually the retest on this trend. And then your June squeeze, way higher percentage move than we saw back here. And then your V shape, your macro break, and then your descending wedge, taking you all the way down to this trend again. And that's where we're sitting right now, forming support. Again, keep in mind, volume profile here, very, very low volume all the way through the original macro until the end, where it starts to pick up into your squeeze, all-time high volume, the January squeeze. Pull back for the retracement, pull back in volume, and then another pump in June, not as high. So decreasing volume off the rip right here from your January squeeze, and decreasing volume all the way through the macro, all the way through the wedge. Just the same way we saw back here, all the way down, decreasing volume, lower and lower volume peaks here, greens outweighing the red all the way through this, all the way down to the end, lowest volume that you saw here. Other than back here in the previous macro, this was the lowest volume stretch that we had. And now volume is picking up again and again at that same level that we saw in January and June. So from a macro perspective, and this is the most important part here, this looks great. Moving on from this, the breakout retest on AMC and the halts that coincided. Your January squeeze here, obviously we were halted here. The pullback, your June squeeze here, again halted. The flag, you break down from it. Here's your macro break here, this gap down. The W that plays out sideways from that macro break, and then your descending wedge. Just riding through this descending wedge here, bouncing on the bottom at support, come up to the top resistance, halted. Come down to support, come back up to resistance, halted. Come down to support, just over and over again. Back up to the top, halted. You finally got the breakout. Very, very barcodey price action here and very low volume price action here. Before we got the breakout where volume starts to pick up, and then here's the breakout move, again coinciding with the bilateral triangle that we traded in for a year. Here was the breakout of that. Also coinciding with the breakout of the descending wedge on the macro. Again halted to retest both the triangle and the descending wedge, and it's holding up perfectly. And since last Monday, we have been trending upward, higher highs and higher lows. So this looks absolutely perfect. Moving on from that, I figured I would show this again. Here was the breakout and then the retest, and we had this descending trend here. Your first touch point here on the breakout move, your second touch point, third right here, and then your fourth, here's your bounce off the wedge as support. Your fourth rejection, come down again, and then your breakout and retest that we got last Monday. And since last Monday, we've been trending upward. Just a very slow, choppy uptrend, but higher highs and higher lows nonetheless. So this looks absolutely perfect as well. Moving on from that. Now, I've covered multiple times that there's two possible scenarios here for the tracking, and I could really quickly just backtrack to that. The first being we would actually be in this iteration here, which is the breakout retest. And the second being we are at the third bottom. I know it's blurry, but the third bottom, the lower low, and all-time low of the flat portion. I'm leaning more towards we are at the third bottom, the all-time low and the lower low, but it's also, it's still on the table and the uptrend is still tracking where we would be in the breakout iteration. And just from a macro standpoint, this makes sense too, where we would have broke out of the macro wedge here. In this scenario, here it is again, the flat portion, your first bottom, that double top triangle type move you get. Here's that little cup that you get coming down to your second bottom, you knife from it. This would have been the tri-peak right here, and then this would have been the breakout, and then again. So here's your second bottom, your tri-peak, and then this would have been the breakout, and this would just be a very exaggerated retest. So both scenarios still are fine, whichever way you're looking at it, it doesn't really make a difference. I am leaning more this scenario where we're at the third bottom and forming the uptrend from it. And again, it doesn't make a difference whichever scenario you're looking at, the uptrend that we're looking for going forward is going to look relatively similar. But just really quickly going over the flat portion again, January 2021 on the left, current cycle on the right. Here is the original drop down to it, and then the chop that you get. The gap up from your first bottom, and over here, same thing, the drop to the flat, the chop, and the gap up. You get that double peak, the triangle type move on both sides. You get this pop in the yellow, back up to that trend, very important trend there in yellow, as you see here, which takes you to your second bottom. Again, gapping up from your second bottom. Your tri-peak, 3 pokes above, 1, 2, and 3 on both sides. And then again, rejecting this yellow horizontal line to come down to your third bottom on both sides, your third bottom, your lower low, and all-time low landmark of the macro. I'm leaning more this scenario, and now we would just be in this very slow, choppy uptrend here, an ascending channel, looking for this gap up right here. It's just taking some time. And the macro break that we're looking for hasn't changed, still $50 roughly, $48, $50. This yellow horizontal line, once the rest of this uptrend plays out, we'll be looking for a gap up over this line like we saw back here. So this is the breakout retest, and then the gap up here, macro break over that yellow horizontal line. Again, we're tracking through this faster than the previous macro. We tracked the entire macro faster, and we're tracking this faster. I mean, that would just make sense. From the beginning of the flat to your third bottom, the all-time low of the previous macro, 320 days, and the current from the beginning to your third bottom, all-time low, 284 days. So pretty much 1-to-1, a little bit faster in the current macro, and we're now in the uptrend that you're seeing right here. So really quickly, just touching on the EMAs, and I've covered this multiple times as well. The EMAs are the same. White is 20 EMA, green is 50 EMA. Here is the double cross that you get in the middle, in between your first and second bottoms. You get this double cross type move, this wave move. Over here, same thing. 20s under the 50, you get the double cross in between your first and second bottom, and then coming down below the 50 again on both sides. And then you get the two crosses here in the tri-peak, 1 and 2. And then over here you cross, and then you get 1 and 2. And then come down to your third bottom, the lower low and all-time low, where the 20 crosses the 50 to the downside again. And that's what we're looking for in this uptrend. Whenever we get there, we're probably going to be battling for this 20 when we meet it on the daily. The 20 EMA, the price action eventually will meet this 20 EMA, and we will fight it the way we saw previously, and then looking for the gap up over the 20 EMA, and then for the 20 to then cross the 50. Again, the signal we're looking for, it's about to pop off, is the gap up over this line here in yellow, $48. We still have uptrend to play out before we see that. So moving on from that. Now getting into the actual channel itself. So the flat portion, your third bottom, your lower low, and all-time low. There is an ascending channel here. I've covered this multiple times. And in the current right now from your third bottom, the lower low, and all-time low, there is also an ascending channel. So getting into that. And take this with a grain of salt. I've said this multiple times. Tracking on the micro is very, very difficult to do, because really what you're looking at is just a repeating iteration of uptrend over and over again. So it's easy to get, mixed up with landmarks, because it's going to look the same no matter what. It's pretty much just a January 15th on repeat. But anyways, moving on from that, here is the channel. So your bottom, your lower low, and all-time low, and then you start the channel, very slow, choppy uptrend. You have a break below the channel here, fighting to claim it. You finally do claim it, hit the top of the trend one more time, come down to the bottom, bounce up to the middle of the range, and gap up. That's why I was looking for big upside this week. And I'm not even saying that it's off the table. I'm expecting upside going forward for the rest of the week. But I thought that originally that this was the January 15th move here. It is January 15th. It's just not the January 15th. So it looks like we're at the part of this uptrend where you break below the channel and you're chopping to fight for it. So respected perfectly here. You did break above it. This was pre-market, and then at open we knifed, and then here was Monday's knife, breaking below the channel, and then Tuesday knifing even more, but then a very strong recovery towards the end of the day to reclaim the channel, closed above it, and then in the morning we dipped below it again, reclaimed it, and then all pretty much from midday until end of day, just downside and dip below the channel again, which is fine, because in the previous macro, again, you're sitting here fighting for the channel here, for the bottom support for some time before you claim it, hit the top of the channel, and then you gap up from there. So I'm not putting any dates on this, how long this is going to take to play out. I'm assuming it's going to take some time, being that we're going to be looking to meet the 20 EMA, which is roughly $12 right now. And it is dropping on a daily basis. The longer we stay down here, the lower the 20 is going to come to meet the price action. But I am expecting to meet that 20 EMA first before we get this gap up that we're looking for. So I am expecting to meet the 20, fighting for it as we saw previously, and then we get the gap over, and then from there looking for the 20 to cross the 50. So it is possible we just get very slow, choppy uptrend here until we meet this 20 EMA, which is fine. As long as we maintain the uptrend, as long as we're forming higher highs and higher lows, I could give a single fuck how long it takes. I just do not want to see a lower low than right here. I don't think we're going to, but just pointing that out. As long as we're trending upward, as long as we're forming higher highs and higher lows, everything's great. All right. RSI, OBV, and volume update. Here's the weekly up top. Here's the volume profile. I've covered it multiple times. The original macro decreasing volume throughout, picking up towards the end, and all-time high volume on the January squeeze. And then from there, decreasing volume once again in the current macro, all the way to the end, very low volume towards the end. And again, picking up and at the same levels that we saw January and June 2021. OBV on the weekly actually formed a new local high this week, almost touching all-time highs. And again, OBV, all this price action from $400 down to $7, all the way down, decreasing volume all the way down as well, which is bullish, and green volume outweighing the red all the way down, very bullish. And that's the reason OBV is still sitting near all-time highs for AMC. So again, here's your descending trend on OBV, your breakout, double retest here, and actually formed a new local high this week and is pulling back again, which is fine, but almost touching all-time highs on OBV. It's getting very, very close. And once again, increasing OBV from a macro perspective on AMC is a very, very good sign. Both your January and June squeezes that we saw, OBV legged up, so very flat here. AMC becomes a meme play. January rip, June rip, and then flat up here, basically at all-time highs. Breakout and retest of the descending trend. So looking for another leg up on OBV, which will coincide with the squeeze. And again, RSI on the weekly is still oversold, sitting right below oversold right now. So this looks very good for us as well. This OBV will eventually pick up and start working its way back up towards overbought. And I'm assuming the next time that happens, we will be squeezing. So that's it for that. And two more things. One, I thought this was pretty cool, so I figured I would throw it in the vid. This is the Fibonacci spiral on AMC, except now we're looking at this on the logarithmic chart. So again, starting at IPO, here's the original touch point on the channel. Sorry, not the channel, the Fib spiral. So the original touch point on the spiral here at IPO, very flat here, all the way through. Second touch point right here, right before you get into the flat portion. And then you get your January and June squeeze, rejecting the spiral here. And all these peaks that you're seeing here, just rejecting the top of the spiral as resistance, we've also been halted. Just keep that in mind. And here would be the breakout, and now retesting the spiral here and forming higher lows on the weekly. So this looks very good. Again, volume is picking up, which is a very good sign. And that's it for that. And the last thing, I figured I would just cover this again. AMC is a repeating January 15th over and over again. That's why it's easy to get lost on the macro, the micro, tracking on the micro, expecting big moves like I was this week. This week more than likely will end up being green, just not green to the extent that I thought, because I thought we were further ahead in the channel, which is fine. As long as this is actually the channel, and right now we're just at the part where you break below it, chopping to reclaim it, that's fine, as long as we're forming higher highs and higher lows. This week more than likely will end green, just not green the extent that I thought it would. But nothing changes for the tracking. So AMC is a reiterating January 15th on every time frame that you look at. I already covered this. On the left, this is January 15th, 2021, the 1 minute time frame. It's a 1 minute chart, and on the right is AMC's macro on a weekly time frame. So I've covered this already. Really quickly, I'll do it again. The W here in the yellow, the W here in the yellow. Your first peak right here, the January squeeze would be the equivalent. The retracement, you get this W ascending, higher lows, over here, W ascending, higher lows here, and then your June peak equivalent would be this. Your flag would be right here and here, and this would be the flag, and then the downtrend. 1, 2, 3, 4 touches on resistance. 1, 2, 3, 4 touches on resistance. 1, 2, 3 bottoms descending. 1, 2, 3 bottoms descending. From that third bottom, you actually form a bit of an uptrend here, pretty much flat, which we did this whole time. This first bottom, this was an uptrend, and then again rejecting this trend here to get your knife down to the V. And the V recovery, again, the V is more or less just an inverse head and shoulders. I can't really show it here because it's a 1 minute chart. I guess I could maybe. This would be the left shoulder, the head, the right shoulder, and then your gap up is your fractal break. Right here, it's a 1 minute chart. This is a micro fractal break, but it doesn't change for the macro. We're looking for the same thing, the macro fractal break, which more than likely will be our squeeze, and we more than likely will open, at ridiculous prices. Whether it be the top or not, it will be a pretty wild overnight gap up when we do actually get our fractal break. So I think I covered everything for the video. I'm expecting upside. Whether it's 1%, whether it's 10%, for the rest of the week. It's just a reiterating January 15th. That's what we're looking at here. Just over and over again. Your first peak, your second peak, your pullback, the V, your first peak, your second peak, the pullback, the V, your first peak, your second peak, the pullback. Now looking for the V. It's just reiterating over and over again, January 15th. And shit froze. Just an uptrend we got going on. That's it. Higher highs and higher lows. As long as we don't form a new lower low than right here, this looks great. So I will catch you guys with another update video, possibly, depending on the price action, possibly tomorrow, but more than likely Friday. So that being said, have a good night. Catch you in the next one.